Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: US inflation is rising and tariffs are getting the blame. But first, the overnight dairy auction brought prices 1.1% higher in US dollar terms, 3.6% higher in New Zealand dollar terms. It was the first rise we've had in these full auctions since early May. This time, the expected 2.5% rise in skim milk powder was matched by an unexpected rise of 1.7% in whole milk powder prices. Butter prices were unchanged, but cheddar cheese prices fell as sharp as 5.6%. In the US, they got the expected rise in CPI inflation for June, up 2.7% when it was rising 2.4% in the prior month. The Fed will have noticed that core inflation rose 2.9%. Food prices rose 3% and rents were up 3.8%. The overall level was restrained by an 8.3% drop in petrol prices. As those year-ago petrol prices normalise for future months, they won't be restraining anything, just in time for the pass-through of the tariff taxes. An independent Fed will be concerned about the upward trajectory. A Fed factory survey in the New York State recorded a rise in July, their first since February, and they are seeing input cost pressures picking up too. However, they also report it is easier to pass on these costs and seemed relieved about that. Canada also reported its June CPI inflation rate coming in at 1.9%, up from 1.7% in May. And India reported declining merchandise exports in June, in fact their lowest level of the year and almost 8% lower than year-ago levels. Imports fell too. But strong services exports, outsourcing services that is, balanced things out. In contrast to China, India's rise is domestically driven, not foreign trade driven, making them somewhat insulated from the tariff wars. And China reported its second quarter 2025 economy expanded at a 5.2% rate in inflation-adjusted terms from the second quarter of 2024. This was bang on what Beijing had set as a target and what observers were expecting them to announce. Strong exports and consumer subsidies helped a lot. And China said its retail sales were up 4.8% in June from a year ago, its industrial production up 6.8%. So that suggests they had the best of both worlds, rising industry and rising internal consumption. That they seem to have done all this with only a modest rise in electricity production, up 1.7%, would be impressive if it was believable. They are almost certainly making big strides in energy efficiency, but it is unlikely to be as reported. Despite these cred issues, however, it is clear that the Chinese economy is not going backwards. But even if they aren't as steep as they have been over the past 15 months, new house prices in China are still falling. Only 12 of the 70 largest cities had prices that held basically unchanged. But for resales, none were in that category. The lure of housing speculation in China is all but a distant memory. For most developers, that is trouble, but pockets in cities like Shenzhen may be seeing a bit of a shine. In the EU, industrial production surprised with a good 3.4% gain in May, far better than expected and continuing the 2025 expansion. The gains were even stronger in the euro area. So it'll be no surprise to learn that the German ZEW sentiment index seems to be in full recovery mode. This started for July, so those industrial production gains have likely continued. In Australia, the Westpac Melbourne Institute Consumer Sentiment Survey showed a third consecutive rise in July, although a small one. Despite the surprise no cut by the RBA recently, most consumers still expect interest rates to move lower from here. But they remain uncertain about the outlook for the overall economy and for jobs. Housing-related sentiment dipped slightly, but price expectations remained high. And staying in Australia, the RBA has reached the preliminary view that it would be in the public interest to remove surcharging on EFTPOS, MasterCard and Visa cards. They also want to lower the cap on interchange fees paid by businesses and require card networks and large acquirers to publish fees they charge. They are now in the consultation phase, which will no doubt involve fierce pushback. Here, the Commerce Commission has been looking at the same issues and will report on the New Zealand changes they want to see very soon. The US Treasury 10-year yield is now at 4.49% and up 6 basis points from yesterday at this time. And the price of gold will start today at $3,327 an ounce, down $22 from yesterday. And American oil prices are down 50 cents at just on $66.50 a barrel, while the international Brent price is just over $68.50 a barrel. And the Kiwi dollar is now at 59.4 US cents, down 30 basis points from yesterday. Against the Aussie were unchanged at 91.3 Australian cents. Against the euro were also unchanged at 51.3 euro cents. That all means our trade-weighted index starts today at just under 67.4 and down 10 basis points. And the Bitcoin price starts today at $117,421 and down 2% from yesterday. And that takes it back below 200,000 New Zealand dollars. Volatility over the past 24 hours has been modest at just on plus or minus 1.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.